everyone, and welcome back to another episode of the Right Mortgage Network's Later Life Lending Insights podcast. I am your host, Victoria Clark, Head of Lending here at the network, and it is great to have you with us. I'm delighted to be joined today by Will Hale, CEO of Air Later Life. Will has been a big part of the driving forward of advisor capability and market understanding with all of his time at Key Group. Will, I'm really looking forward to diving into your insights, a reflection of the market, and your thoughts on where life lending is heading next. Welcome and thank you for joining me on today's podcast.
Hi, Victoria. Thank you very much for having me. I'm looking forward to it.
Yeah, definitely exciting. So we're talking to everyone today on the podcast post our Later Life Lending Conference and Awards dinner, where Air were kindly one of our sponsors for the day and evening. The day into the evening was full of positive energy and looking ahead at the opportunities to come next year in later life lending. We celebrated achievements of our advisors. It was amazing to have so much passion in the room and a great community of later life advisors. The lifetime mortgage market in 2025 has continued to evolve in thoughtful and meaningful ways. Despite a steady pace overall, we've seen remarkable innovation, enhanced customer-focused solutions, and a growing emphasis on advisor development. It's a space where expertise and support matters now more than ever. And today, as part of our conversation, we're thinking about driving safe growth in later life lending, thinking about how we can make sure advisors feel confident and customers stay protected. This has been heavily backed this year by the FCA's discussion paper released back in the summer, where more than ever has had a big spotlight on later life lending, which obviously we love to see it. We love to see it come to the forefront. So, Will, coming to you with our first question, what were your key takeaways from the paper and how do you think the industry has responded so far?
So, Victoria, I think for me, the discussion paper really sort of represents a key milestone in the evolution of the later life lending market. And isn't it fantastic that actually the mood music from the regulator has changed so significantly? So, for me, the discussion paper really calls out later life lending as being a critical part of the market going forward. And it recognizes that really this sector needs to move from a niche to a norm. And it really sort of demonstrates that this sector is capable of really changing the lives of so many people to deliver a more fulfilling retirement or maybe to help them with their intergenerational wealth transfer needs. So it's really encouraging, I think, to see the FCA put some focus on this sector. But also, there were a few sort of challenges contained within that paper that the industry really needs to face into. And the big one for me was calling out the silos that currently exist in the market. And I look at those silos in a number of sort of different ways, really. I think if we just look at sort of our sector, the mortgage sector to start with, we know that we've got some key challenges in terms of the gap between specialist later life lending advisors and mainstream mortgage advisors. And really, we need to sort of break down the barriers that exist between those two populations if we are to truly step up and serve the needs of customers. So for me, that means two things, really. It means both sets of advisors need to take a broader view on customer needs and circumstances and make sure they're aware of the product sets that sit outside of their particular area of expertise. So for mainstream mortgage advisors, it means recognizing that for some customers, modern lifetime mortgages may be a good fit, and they either need to equip themselves to advise on those products themselves or look to put in place trusted referral relationships with specialists. And on the other side of the fence, I think you've got later life lending specialist advisors who need to be aware that some of the customers that come to them may actually be able to fit into mainstream products. And they need to look at income and expenditure and really focus on whether some of those products may be more suitable for a lifetime mortgage. So big challenges in the mortgage sector that the discussion paper calls out. But I also think there's a great opportunity here for mortgage advisors as well, generally, because the FCA was also recognising that the sort of wealth and generous IFA community are probably not considering property wealth within their financial planning as much as they should be. And if we can really tap into that population of advisors and facilitate great referrals into the mortgage community, then again, that can be great for all of our businesses. So for me, in summary, the discussion paper is something that the sector should really embrace. And I think actually, whilst putting out a few warning signs, it also signals a wonderful opportunity for us in the next few years.
No, I completely agree, and I think like any of it, as I personally, I've come into looking at the whole of lending for the network this year, and for me, it was a really important factor that when taking on this role, that looking at the two, that extra release was just seen as another form of specialist lending. It really should just be on everybody's mind all the time. So, and having this discussion paper, like I said, it's just really brung it to the forefront for a lot. I've been going to mainstream events this second half of the year where later life lending is on the map. It's being discussed. It's saying you've got to look at these options that are available. So I feel the silos of being in each end of the camp is hopefully blurring, but I think both sides need to understand both sides of things, don't they, to be able to scale up and down the ladder for the different things that they've got there. So what do you think? Have you got any key actions that you would recommend for advisors on either side?
I think a couple of things, and I sort of touched on it on my initial response, but first and foremost, I think for mainstream mortgage advisors who aren't really tuned in to the current equity release market, I would just encourage them to really engage with the education and support materials that are available through platforms such as AIR. I think again, there's so many sort of myths and misconceptions around lifetime mortgages, and the product sets have evolved so much. So I think mainstream mortgage advisors really need to make themselves more aware of what options are available. And as you know, Victoria, the product evolution we've seen in recent years has been phenomenal. So lifetime mortgages now are just like another mortgage in many respects. So you've got the ability to make repayments, which can help mitigate the impact of compound interest. You've got products out there which have no early redemption charges from outset. So again, create a lot of flexibility. And then you've got all of those embedded protections, which we all know are so important, such as a no negative equity guarantee or fixed rates for life. So I think mainstream mortgage advisors really need to sort of take a fresh look at the market and make sure they fully embrace the evolution that we've seen in the product set. And then the other sort of key action, I think, which applies to both sides of the fence, I think, specialist equity release advisors, I think, need to reach out to both the mainstream mortgage community and the wealth management community and make sure they're trying to put in place those referral relationships, which can mean that they have very cost effective customer acquisition routes in place, but also that they can have reciprocal referral arrangements in place as well, which can help their own income streams as well as help deliver good outcomes for customers. So, looking at referral arrangements potentially with experts in the sort of care planning area, or maybe with sort of debt counselling services, those arrangements can be really helpful in building a business and making sure you're doing the right thing for customers. So, as always, lots of different routes to making a business a success and to deliver great outcomes for customers. But those are just a couple of the actions that I would recommend.
No, and I think it's like the tools people know about, isn't it? But it's just taking a refresh and getting out there, getting to talk to different people, networking, like you say, use platforms like yourselves to really help them with even their own education, but then extra release advisors going out and helping with the education and spreading the message. I just think it can be done both ways, can't it? And it's not anything new that it is what you're recommended. It's just reminding everybody, like, just come on, keep spreading the education, and it ultimately it's going to help more customers. So yeah, I think there's some really great things there that some people can just get on with and really get started with the breakdown of the silos, especially with what's more to come. So, and I know we love good quality advisors in later life lending. So, like you said, there's been some misconceptions of equity release, but genuinely, I feel like the work that's being done now in later life lending is really remarkable. And it definitely, from the advisors within our network, we're really proud of them. We've got to give them a shout out for all the hard work they do and really thinking about that, like you say, with affordability, all those different things. But the times are ever changing with more coming in to protect our advisors, to protect their customers. So, Will, how can advisors ensure the best outcomes for customers while also achieving the compliance requirements efficiently in the midst of all these compliance developments?
Well, Victoria, for me, it's a phrase that AIR has been using within our communications for some time. But for me, it all starts with comprehensive conversations. And for advisors, making sure they're acting as advisors rather than order takers. And they're treating every customer as an individual with a very specific set of needs, wants, and circumstances. And I think really that's the foundation to delivering good outcomes, but also achieving good compliance. Because if those comprehensive conversations can be sort of captured in the customer's own words, whether that be through sort of voice or video recordings, or just in terms of written notes that can be put on file. I think that record of that comprehensive conversation sort of really is the starting point, as I say, for making sure the advice is of great quality. But then a couple of sort of technical things that I would call out, and you touched on it there. I think affordability now is something that is such a crucial part of the later life lending market. Again, when all equity release mortgages were roll-up mortgages, I think probably advisors didn't think about needing to capture income and expenditure in the level of detail you need to now. But with products having evolved and the ability for customers to make very, very minor repayments on a monthly or an annual basis to mitigate that impact of compound interest, it's really important that advisors explore that income and expenditure in detail and work out what the right amount is for a customer to be repaying. So I think affordability is absolutely crucial in getting to the right outcome. And in terms of, I think, sort of other sort of compliance elements, I'd point again, I suppose, to the tools that AIR provides to help support advisors. So again, I think having a really robust fact-find template, to have a really robust sort of sourcing and research capability, and then to have good suitability report templates to make sure that a recommendation is played back to a customer in language that they can understand, because understanding is a key part of consumer duty. A customer needs to understand the recommendation they're receiving and why a certain product is recommended for them to take up. So again, a few tips there, and I think more broadly, I think advisors need to sort of embrace compliance and see it as a way of keeping their business safe. And actually, if the right compliance disciplines are put in place, they can also help the commercial performance of the business as well.
Yeah, no, I couldn't agree more. And I think like you say there, with just having a recorded conversation, like there's no doubt these conversations are happening. It's just if you've got no evidence of it, it hasn't happened, have you? So it's just really getting into it. And the comprehensive conversations coming from AIR, I think, as you guys did bring into it, was really powerful because it's just coming from an equity release point of view of you're saying you've got to be talking beyond equity release. If it's coming from that way, it's coming from the equity release council, we're saying it as a network. Advisors have got to just grow and move with the times, haven't they? And just understand that these are the steps they've got to take to help their customers, which I think they're open to. I think it's just new things, isn't it, all the time that we're just trying to help advisors have the tools for. But yeah, there's so much helpful things that you can offer from your side of things, which is in partnership with us, which is just really amazing. But thank you for all of the insights that we've gone through so far, kind of more of a reflection. But before we wrap up, I'd love to look ahead. As with the later life lending sector, as we're saying, it's evolving, changing at such a pace all the time. And then I'm sure you've got quite a bit more of an insight of what the future is to come. So what innovations do you see coming down the line? Is that in with products, technology, advisor support? Have you got anything that you can share with us for the year ahead?
Well, Victoria, there's a lot there. I need to sort of look into my crystal ball, I think. But as you said at the outset of the podcast, with your introductory remarks, I think the sector's been through a really challenging period, hasn't it? I mean, we sort of we peaked as a sector in terms of lending value back in 2022, when the market was sort of 6.2 billion, and since that, we've struggled a little bit to recover to those heights. So we're now sort of a market 2.3, 2.4 billion probably this year. But my prediction is that next year we're going to see some really strong growth in this sector. I think there's a lot of pent-up customer demand out there. And now we're sort of beyond the budget, and there's a bit more clarity, I think, in terms of government policy and the direction of travel of the regulator. I think advisors can really invest in this market again, and I think customers will have the confidence to sort of move forward with recommendations. So my first prediction is that we'll see a really buoyant market next year, and indeed for the years ahead. I actually think on the product innovation side, I don't imagine a lot of big sort of landmark product developments. I think actually this sector is really well served at the moment by products.
Mm.
And I've touched earlier on in this podcast around, some of the innovations we've seen in recent years around interest service products and some flexibility around early redemption charges. So I think, advisors have all they need in their kit bag to service the majority of customer needs. I think the one area where we may see a little bit of innovation is in income products. And that, again, sort of plays to my comments around, I think, later life lending being a critical part of anyone's broader financial planning. So if people want to use the equity built up in their properties to supplement their pension income, then an income-based equity release product, I think, has got a place. So watch this space and see if we see some innovation there. But I think actually the majority of the innovation that we see in the sector will come from technology. I think AI is clearly the buzzword at the moment, and I think AI has some interesting roles to play in terms of helping advisor efficiency. I never think that AI will replace an advisor, but I think advisors
No,
can use AI and technology to drive more efficiency in their process, to help with customer acquisition, and indeed to sort of satisfy compliance requirements. You talked about call recordings, and if you overlay AI onto some of those call recordings to get call transcripts and to assess vulnerability, there's great opportunities in that space. And more specifically to AIR in our sector and in that sort of sourcing journey, I think we see the potential for some great collaboration between mainstream sourcing and CRM systems and some of the technology providers in the later life space. So I think if we can use technology to help break down those silos, to create more robust triage and referral models, then I think, again, we can make a real difference to some of the challenges that the regulators put before us. So technology is the one thing that I think advisors need to embrace and to keep a close look at the innovation that's going to happen in the next few years.
No, I couldn't agree more. And I think the whole thing with AI is it's amazing and you can't let it intimidate you because it's not going to take your job. It's going to help you be better. And I think that's the message, isn't it, for advisors with the whole thing with AI. You've got to move with it and pick up the tools that it can help you with. But yeah, some really interesting points you say there. And I think looking at a customer type rather than a product type is a big thing, isn't it, for next year, of just making sure that everybody's doing that. So that should break down the silos. And especially if sourcing systems are doing something to support that too. It will just make things a lot clearer for everybody. But yeah, Will, that's all we've got time for today. So thank you so much for joining me. Your insights on driving safe growth in later life lending space has from strengthening customer awareness to breaking down the silos to embracing the change. It's all been really, really valuable as well. So thank you very much for your time.
Victoria, it's been a delight to join you. Thank you very much indeed. And have a happy
Thank
Christmas.
Thank you very much. And AIR and the Right Mortgage Network's partners focus is firmly on ensuring advisors feel supported, customers stay protected, and we achieve the best outcomes for all. So thank you also to all of our listeners for tuning into another episode of the Later Life Lending Insights podcast. As always, we love your feedback, so please do keep them coming for the 2026 podcast. I've been your host for today, Victoria Clark, joined by Will Hale. Thank you and see you next time.